Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello, gold friends. Looking at, let's start with the dollar on the hourly time frame. So the bears are still in control of the dollar. We rejected from 140 twice, and we hit lower lows. So the dollar is still weak, but we're seeing weakness in gold, and this is attributed to the fact that the market is so strong. And we saw another big strong day in the S&P 500. So we know gold and the market are in an inverse relationship right now. And it's important to note that, because otherwise right now, if we weren't keeping the market in mind, we would be saying, what is going on? Why is gold pulling back with the dollar so weak? So the dollar support here is down at 106 cents, and the key support is on the daily time frame, where we're looking down at that 99.43 level. That's a key level for the bulls to hold to maintain the longer term higher low pattern. Look at how many bullish reversal candlesticks since the high that have been negated. 1, 2, 3, 4, 5 with no confirmation. Rejecting from the 10-day moving average resistance about 5 or 6 times. Bears are in full control of the dollar. You look at gold, gold is weak as well. Short-term bounce attempt, rejecting from resistance, dumping down to a new low, short-term bounce attempt currently underway, cooling off the RSI, but look at this support level. We bounced off of 1195.75 previously, and although we've dipped below it multiple hourly candlesticks, we have not closed below that level. So it is still holding as support. Need to tighten that up a little bit. Put it right there to make sure and hit those lows. No candlestick closing below it, so that is a support that is still holding. But we look at the daily time frame and things have changed. We have confirmed the bearish reversal candlestick, and we have lost the 10-day moving average support. Very similar candlestick here, bearish reversal. Bulls bought the dip, held the 10-day moving average support. That's where I thought, actually back here is where I thought the temporary top was going to be. Bearish reversal candlestick, bulls bought the dip, negating that reversal candlestick. Happened again, not this time. We are not negating the bearish reversal candlestick. We are confirming it, and we're losing the 10-day moving average support in the process. So looking down at 1193.14, then I'm looking at that other consolidation low, 1187.71. And the question now is going to be, how much downside are we going to see? And if we see a bounce, we're going to look to back test the 10-day moving average as resistance. It's currently 1205.47. So if we see a bounce tomorrow, a bounce attempt, if we reject from that 10-day moving average resistance, that's going to be a bit of confidence for the bears that we are indeed going to pull back from here at this point. So again, watch my SPY video. Obviously, the bulls are in full control. Huge move over the past 2 days. No sign of the bears anywhere. And I'd say the gold bulls are probably pretty lucky that we do have this lower wick showing some of the bulls buying the dip today. Not a significant amount. We need to keep an eye on this bearish MACD cross that might follow through. But let's look at these individual minor names. GDX is still holding support. So we're bouncing off this 8-period exponential support, 1, 2, 3, 4, 5, and now 6 times. And we also have the 100-day moving average support right at that same level. So we rejected from that 3 times, and we back tested it and held it. So that support is holding, the 8-period exponential support is holding, and we must continue to hold that level, or we will look to consolidate. Support is 23.11 and 22.55. That's price action support, aside from those moving averages, which we need to update at the open every day to get those updated levels. Weekly time frame is currently a bearish reversal candlestick rejecting from the 50-week moving average resistance. We would have to see a red week next week to confirm that, but certainly not the way that the bulls want to end this week. We still have 2 trading days left to go. GDXJ. So certainly similar, but we never broke the 200-day moving average resistance after a bunch of rejections, and we are just barely clinging on to that 8-period exponential support. So same thing where we have held it 1, 2, 3, 4, 5, 6 times. That level is 37.06. And in terms of price action, I'm looking at support of 36.49 and 35.71. So you can see this MACD looking very similar to the gold MACD. If we break this higher low pattern on the daily, we will likely see that bearish MACD cross follow through. Weekly candlestick, not nearly as clearly bearish as GDX in the sense that we do still have the 50-week moving average support, and we have no moving average resistance in the near term here, whereas for GDX, it's a clear moving average resistance rejection and a bit more of an upper wick. Not as significant an upper wick on GDXJ, but also an indecision candlestick, which at the top of a bounce does indicate a potential reversal. The thing is that GDXJ just hasn't confirmed similar candlesticks in the past couple weeks. So it's a bit of an indecision period where we currently stand. We are getting the signals from gold, heads up bulls, because things could be turning around here. And also, if the dollar begins to bounce, it's only going to put the downward pressure on gold even further. So imagine if the market and the dollar were going in the same direction. I would expect this gold pullback to be a lot more significant. So like I said, the bulls are a bit fortunate in that regard, and we do have that nice little lower wick showing the bulls are still sticking around, trying to defend support. They are just getting the odds stacked against them in the short term a little bit. So let's see what the weekly time frame looks like here on gold. So the weekly is a bearish reversal candlestick, the first red week we have seen, and even if we close this week at 1200, it is still going to be a bearish reversal doji. So looking for normal, healthy consolidation. Keep in mind we could consolidate for 2 weeks here, and it would still potentially be a bull flag on the weekly. After a strong move, if we see a little bit of contained consolidation on low bear volume, and this week is currently low bear volume comparatively to the bull volume, then it could still be just normal, healthy consolidation. So in these videos over the past few weeks, you've heard me saying we need to see some consolidation to believe that this move is going to be more than just an oversold bounce. Well, now it looks like that consolidation is beginning to form, and if the bulls hold ideally 1180, it would look really strong. But we could pull all the way back down a bit lower. We could pull back down to 1170 and still maintain a higher low and then make another move back up towards 1200. So the midterm future, that's going to remain to be seen. But in terms of the short-term future, time to start looking, and let's look at some bears. Dust. Look at the 8-period exponential resistance. 1, 2, 3, 4, now 5 rejections on the verge of a bullish MACD cross, but we're not getting that unless we can close above exponential resistance, and then we'd be looking up at 36.72. And looking at JDST, seeing the same rejections, exponential resistance, closer to a bullish MACD cross, and the bulls need to see a move up over 21.85 to break the lower high daily pattern and need that 8-period exponential as support. So I really like these 8-period exponentials on the daily time frame for both the bull and the bear miners. I would be watching those. And again, the gold 10-day moving average, now resistance. So thanks for watching. We'll check back in tomorrow. And again, all momentum favoring the SPY bulls at the close at the high of the day in full-on breakout mode, all-time highs on the verge of a bullish MACD cross. So if we see further continuation tomorrow, it's only going to lead, in my opinion, to further consolidation in gold. So we'll check back in tomorrow as always. I appreciate you watching. Thanks for all the likes and the shares. I'll see you soon.